Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what's going on in the Twitter space, what people are talking about. It's going to be very uranium heavy. I know a lot of people are looking at the uranium sector, so I'm going to touch on the uranium sector and give my financial opinions around it. We may also, towards the end of this, go over some ETFs, URNM versus other ETFs, to see how they're doing and how they're performing on a relative strength basis. Generally, when a market is outperforming other markets, that's generally when it's very strong and when a lot of people start paying attention to it. So we might go over that as well. I'll open that up in another window after we go through Twitter and go through a lot of information on Twitter. So let's dive in here and I'll give you my opinions around Twitter. So again, if you want to follow me, it's at finding_finance. And if you want to join the website and join our community, I'd love to have you be a part of it. That's finding-value.com. And you can use the word discount in the coupon code if you want a discount. So we've got uranium is a cyclical commodity whose price goes through extreme lows and highs that led to massive returns for investors in the last bull cycle for mining stocks. History doesn't always repeat, but it often rhymes. So buckle up for another volatile bull cycle. This is the last bull market. This is Camco. And what you can see is that Camco had a pretty steady increase from the bottom of 2002 all the way to the top of 2007. So we saw a pretty large move during that time frame that was pretty steady in, we'll call it the largest company. If we go into the smaller companies, this is Energy Fuels. You can see that we went sideways for a long period of time and then really ignited in 2006, which was towards the end of the bull market. And the retail sector really jumped into this. It went from $350 up to $274. Holy crap. Now that's a move. That is a move. Then on the backside, you got ripped if you held it after $274, all the way back down to $8 a share. So this one was very volatile. I don't think too many people would have held it through the $140 to $68 pullback. I bet you I could do it. I just hope I don't hold it past the peak here. I don't think I will, but hopefully I'll probably sell it on the way back down, sell out at like 180 or 200 or something like that. Looking at Mega Uranium, another one. It didn't really do much in the beginning. It did some, don't get me wrong. I mean, these are big moves in the beginning even. I went from 4 cents down here all the way to 41 cents. That's a 10 bagger. But you would have been paid even more if you had continued to hold even after that 10 bagger. I went from 41 cents down to 22 cents. Probably made people feel really stupid. Oh, I held it through a 50% pullback. And then it ripped again all the way up to $9. But that was not an easy ride. We went to 562 and a pullback of 229. Another one that makes you think, is this the top? This is not an easy ride, guys. It is very difficult. And you're going to have to be using more than just technical analysis, I think, to ensure that you're still in this uranium bull market. You're going to have to be looking at ratios. You're going to have to be looking at fundamentals, the demand, supply, inventory levels, all of those things, the physical uranium price. You should be looking out the side mirrors, out the side windows in your mirrors, looking at other commodity sectors as well and see how they're doing. It all plays a part. And then the last one's Denison Mines. It's another one as well where it was very low in 02, 03. And we had some pretty violent pullbacks the entire way here. It was not an easy ride. But it ultimately went from 25 cents to 16 bucks. A major move to the upside there. So you're going to have the cojones to hold on to this stuff if you want to ride this big move. This is really not a long time frame to be making those types of gains. 03 to 2007, middle of 2007. I don't think it's going to be easy, though, and I don't think that the majority of retail investors are going to hold on through it the entire way. They're probably going to buy at 75 cents, sell at 47 cents, buy at $1, sell at $1.50, and basically miss this entire big move from top to bottom. My vision, the way that I look at things, is I try to buy things low and ride through it all. People call me names. They're like, "You didn't sell at 330 and buy it back at 150." Okay, I'm like, okay, yeah. Looking backwards, that's easy as heck. Going forwards, it doesn't matter, guys. If I buy at $1 and sell it at 10, I'll take it. All right, I'll take it. Or if I buy it at 28 cents, 30 cents, 40 cents, and I sell it somewhere at 13 bucks, I'll take that too. That's a major move. I'm pretty good at buying low, and I'm very good at holding. I'm emotionally stable, I should say. It's very hard to do that. I don't think a lot of people have that emotional stability. Rana says, tradable market cap of uranium mining sectors, around 40 billion. Supplying the source of uranium powering 10% of global electricity. To put that valuation in context, the Irish budget airline Ryanair is to buy up 40 billion worth of planes. So this little budget airline's buying as much as the entire uranium mining sector. John says, did you notice how the 700 million pounds of signed long-term uranium contracts over the 3-year period of 05 to 07 corresponds with the near tripling of the spot U308 price from 50 to 150? History tends to rhyme, so you know what's coming and why we're excited. This is the big long-term contract in the blue bars. The orange is your spot price. So this is millions of pounds. That's your utility term. This is utility spot. And then you've got the spot price. So we are increasing here recently from 2020, 21, 22. And I think 2023 will probably beat 2022. So we're increasing those long-term contracts. And the spot price generally follows. It's looking good. Looking at the pressure squeeze, Got Uranium Miners by Patrick Karam. We are, momentum-wise, we're waking on up. We're moving on up. We're coming up out of this downtrend line. We also have a downtrend line where we're putting pressure on that resistance trend line, and we're starting to break to the upside. This could be a big move. It could be the bull market coming, guys, in uranium. Are you locked and loaded? I don't know. And this isn't meant to be as advice. I'm just bringing up information, data. It says, boom, Bank of America has gone nuclear, issuing 2 new buy uranium stocks and ETF reports today. The RIC report, the nuclear necessity, and the ETF Global X URA for the third bull market in uranium. I'm not permitted to share these reports, but here are quick overviews. So, the RIC report, the nuclear necessity. The third bull market for uranium, we are bullish on uranium and nuclear power after a decade of underinvestment. A shortage is visible. Our strategists forecast 20 to 40% upside in the spot uranium price. Global demand is also rising, with 60 new reactors being built and 100 more approved. Resource nationalism, energy security, war, and inflation echo the nuclear build-out of the 70s and 80s. They say for exposure to uranium, B of A analysts were bullish with buy recommendations on Yellowcake, Camco, Kazatomprom, URA, LEU, and DML. Not DMX, DML. It says B of A points out that there are a number of policy shifts not yet priced in that could be significant short-term bullish catalysts. G7 countries could impose sanctions on Russian uranium. More leaders may embrace nuclear as net zero deadlines loom, as nuclear is the cheapest, clean alternative on a full system all-in basis. B of A now has a $75 spot uranium price forecast in 2025. And URA for the third bull market, uranium is the key to energy security and decarbonization. It says, we are bullish on uranium and nuclear power. Supply is tight, and our analysts expect a structural uranium shortage through 2035. Demand is rising amid resource nationalism and a global focus on energy security. There's a chance for a further bullish policy shift as countries realize the necessity of nuclear for any plausible path to decarbonization. B of A points out that uranium's last 2 bull markets saw returns greater than 500%, and that today's uranium bull run is just the beginning. ETF URA offers better risk-adjusted returns than commodities and stocks, especially for investors unfamiliar with the uranium market who are looking for a good balance between liquidity and diversification. URA has seen strong inflows of $1.3 billion in the past 2 years and has highest number of portfolio holdings in energy, materials, and industrials, as well as an 18% stake in physical uranium. Nice. Oh, this is me doing my thing. It says often there's no correlation between the success of a company's operations and the success of its stock price over a few months or even over a few years. In the long run, there's 100% correlation. This disparity is the key to making money. It pays to be patient. This is the disparity. I am showing some people companies that have cash on their balance sheet greater than their market cap, and they are bringing in more cash at faster and faster paces. And people aren't seeing the price move that quickly. And it's only been a few months or 6 months. You got to be patient, guys. That is where the money is made. You have to identify that disparity between the value and the price. That's what I'll say there. I will talk about platinum here. It says, after breaking through a 2-year resistance level, platinum is gaining strength. Despite investor skepticism, the macro and fundamental case for precious metals has never been stronger. Central banks have no option but to improve their quality of their international reserves, and gold is likely to be preferred alternative. The traditional 60-40 are the next ones in line to make significant adjustments to their current allocations by reducing exposure toward historical overvalued equities and fixed income investments. This is the rotation of money I talk about. As gold appreciates by reestablishing itself as the most credible haven asset alternative, other precious metals and commodities should follow suit, creating an incredibly bullish setup for tangible assets. Downtrend line, broken, retest. Let's roll. Let's roll, platinum. Let's roll. Let me go to the charts and show you guys some other things that I've been looking at. This is URNM. URNM, I'm going to price URNM versus other ETFs. And we'll see how the performance of URNM is doing to other ETFs, because I know that this is important. And I go over and talk about a lot of ratio investments. So we've got URNM versus XLE to start out with. And there should be some lines that pop up here as this thing loads. URNM versus XLE, it's looking awfully good on the right-hand side here as we outperform. URNM outperforms XLE and is breaking that downtrend line. Very strong candlesticks on a weekly basis. Looks very good for URNM. URNM versus natural gas, still hanging out at a very cheap level. Actually, natural gas looks very cheap in relationship to URNM. Natural gas looks cheap to everything, in fact. URNM versus XOP. Yeah, you know me, still heading higher against that. This looks very good for URNM as it's outperforming XOP and has momentum to the upside. URNM versus platinum. Looks like we're just moving sideways. But we're coming up to this resistance line and we could very well pop through it. If it doesn't pop through it, platinum could also be on a rampage. I also like platinum. I own both of these assets, so we'll see what goes there. URNM versus the NDQ. URNM is starting to move on higher. We'll see if we can move on up against other assets here. URNM versus the commodity index, and we're moving on up. We're at a very low level. This looks like it's ready to rip to the upside for URNM and outperform the commodity index. Looking at URNM versus OIH, which is the energy service sector, we are definitely breaking out of this. I can throw a trend line in here. We're breaking that to the upside. Looks really good for an outperformance of URNM. URNM versus REMX. Is this thing going to break out to the upside and absolutely dust this thing? It is possible. It is still coming up into that corner. If we break to the upside here, URNM would outperform and just rip it against REMX. URNM versus COPX. We've broken this resistance line to the downside, support line. We're coming back up. It still has some work, but that is also looking quite good, and it has got a little bit of momentum. Does this look good on a long-term perspective? Not as much, but again, we'll see what happens. URNM versus SPX. We came back to this support level. We're starting to move higher on the weeklies, and the daily, we could see we just ripped it here this past session. So, I mean, it looks good. I wouldn't say that it doesn't look as good as it was in 2020, where it was basically cheap against everything. That is a full alignment in the charts, if you can get that. The full alignment is the cheapest that you can get. I know we've got that full alignment over in gold and silver, where I think they look pretty cheap against everything. They're about to outperform a lot of things. But uranium is moving positively in the right direction, and hopefully that momentum can continue. But that's what I've got for today, guys. And if you guys like the content, give me a thumb up, subscribe to the channel, subscribe to the website if you like, and we'll catch you later. This is Finding Value.